Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, April the 7th. Today is a good Friday. Congratulations and enjoy your long weekend. I'm going to provide you with a quick update on unemployment rate that came slightly lower than expected, 3.5 instead of the 3.6 consensus, and non-farm payrolls way lower than the previous one and slightly lower than the consensus that was 239. So through 236,000, and the participation rate is quite good. And look at this, average hourly earnings month over month slightly increase and year over year is slightly decrease. So mixed sentiment, mixed data that points towards resilient economy, but at the same time still a little bit of inflation due to payrolls. We will have to take a big look regarding this week, regarding all the economic data that we got. So for example, remember that we got on Tuesday JOLTS job openings that came lower, the first time in a long time that we got less than 10 million openings. And yesterday we got initial jobless claims that came higher than expected, both initial that and continuing, and also the ADP employment change on Wednesday that came way lower than expected. So at the same time that we are thinking about, okay, unemployment rate is ticking down, maybe Fed will 100% or more probably, most probably hike in May, 25 basis points. This is what markets are pricing in and are expecting. But at the same time, we are seeing slightly decrease in job openings, slightly big decrease in private employment, and now non-farm payrolls lower than expected. Hourly earnings, quite important data, came month over month slightly higher, but year over year is quite good, 4.2 coming from 4.6. So mixed sentiment, and I think what markets try to do, if we take a look at the March jobs in 1 month net change, hospitality and healthcare got the big one, and retail trade, manufacturing and construction took a big hit on the negative. So some analysts are saying that everything is moving in the right direction because they are seeing a cool down of certain economic data, and at the same time labor market remains tight, that show signs of strong resilient economy. This is a balance. This is a tricky situation in which you want to fight inflation by cooling down the economy, but at the same time you don't want to destroy the economy. You just want to have a slow cool down of certain sectors to just beat the inflation enough to support the economy and not enter a recession in the long term. That's super tricky for the Fed, but this is basically what it's all about. Equilibrium regarding inflation data, inflationary sectors, but also at the same time strong sectors that support the economy and show resilient economy and not enter into recession. So this is the 5-minute chart on the Nasdaq. Remember that stocks and a lot of markets are closed. This is the Nasdaq. Barely little move on the release of the economic data at 8:30. I mean, this is just consolidation. A lot of people were hedged at these levels. Yesterday we got a really nice move to transform the daily into a nice support. And look at this. I was mentioning yesterday that we need to hold this 13,068 level on the daily in order to not destroy the setup for a bull flag. And maybe next week, once traders and investors digest today's data, maybe next week we can have continuation towards 13,500. That is my expectations. I'm still bullish, and it will all depend on this weekend. Next week is going to be super volatile, but look at this, just meh, don't move. This just lack of participation. So a lot of people were hedged. Today is a big holiday, long weekend, so But I think we are holding and at the same time not seeing bad data. I think this is going to be bullish for next week. At least that's what I see. Dollar. Dollar got a little bit of push initially. It retraced a little bit, but still 2.23 in the green. Well, it's good enough for dollar. We will see. We just need to retake 102 in order to maybe have some move to the upside. But right now we are still on a big pullback on the daily. So what is good? It's that yields, the 2-year yield is up 3% on the day, barely reaching 4%, and the 10 years also in the green. So yields going higher and showing signs of support, and green days are showing strong economy. But at the same time, well, I think bonds market are saying, well, maybe we are wrong and Fed will not cut this year. That's why this is interest rates on December, 4.43, up 4.48% on the day, and not pricing in any interest rate cut, at least for now. So we'll have to wait because yields are showing strong economy, but at the same time, higher interest rates, maybe for longer. So we'll have to wait. But what is true is that setup on the daily remains strong. Nasdaq futures moved and held yesterday's level. Look at this pre-market activity. It's just no one wanted to bet against nothing. And the most volume was conducted around here, right here below price action. So if we check the 30-minute chart, we have still a nice level in here to break for next week. We are holding the critical level, the blue dot line on the daily, and maybe we might see some push towards these levels that started the trend down, and then the consecutive day, the follow through to the downside. We held, we push, we are now holding. Let's see for next week regarding the economic data, because next week it's quite important. We have CPI on Wednesday. Next week, Monday, there's nothing, only Fed Williams' speech. On Tuesday, we have a couple of speeches also from Harker and Hatchari. And on Wednesday, we have CPI. So everyone will be hedged and everyone will be betting against higher inflation. We are still pricing in slightly increase in core inflation. But look at this year over year, big decrease on the general inflation rate, and also month over month. So this is the key part, the core inflation that remains sticky. It's going to be the focus for everyone. Until then, well, enjoy the long weekend, rest, take a well-deserved rest. I don't think market, well, I think market is already closed or closing in a couple of hours. So I'm going to enjoy my weekend and be prepared for next week, because the main focus for me is this daily setup. I want this bull flag to be successful. I think we have a good opportunity with these two bottoming tails to just hold previous pivot and also take the opportunity to be strong up here ahead of CPI data on Wednesday. So that's my expectations. I will be patient, disciplined, but for now, I'm going to enjoy the long weekend. I hope you do too. So thank you for your time. As always, if you found this video useful, please remember to click the like button and subscribe to the channel to receive notifications when I upload new videos. I upload new videos every single day for market forecast, market updates, and market recap. You can find up-to-date information in this channel, technical analysis, fundamental analysis, some tips, and my understanding on all the markets that I trade. So I hope you enjoy my content. Please support the channel by liking this video and also support by subscribing. Let me grow. I will be Here for you next week. For now, enjoy the weekend and remember that discipline and risk management are key for your success. Stay safe, everyone. Enjoy the long weekend and see you on Monday.